Today, Bitcoin rises after better than expected economic data. SEC Chair Gary Gensler reflects on his tenure at the agency. And Matt Hougan of Bitwise Asset Management breaks down the firm's survey of financial advisors and their attitudes towards crypto. Welcome to CNBC's Crypto World. I'm Brandon Gomez. Crypto markets in the green this morning after struggling in recent days. Better than expected PPI data, which tracks how much producers pay for goods, gave investors some assurance ahead of more data tomorrow, the much more anticipated Consumer Price Index. Now, as of noon Eastern, Bitcoin bounced nearly 5% and traded at the $95,000 level. Ether rose 6%, just shy of $3,200, and Cardano jumped more than 7% to 98 cents. Okay, let's talk about the top stories. SEC Chair Gary Gensler joined CNBC's Squawk Box this morning to reflect on his leadership at the agency. Right off the bat, he was asked about crypto donations to the Trump campaign ahead of the November election. He acknowledged the trend of crypto fundraising, but argued it wasn't a central focus for voters in this election.
This field, the crypto field, a highly speculative field, has not been compliant with various laws, whether it's anti-money laundering laws, sanctions laws, or in our case, securities laws. Now, Bitcoin's not a security, but these 10 or 15,000 other tokens, the investing public has been hurt over the many years. My predecessor, Jay Clayton, who's going to serve again in the Trump administration, but Jay Clayton had brought about 80 cases. We're a law enforcement agency. That's what we've continued to do.
Gensler was also asked about the agency's regulation by enforcement approach under his leadership, and about this ruling from a federal appeals court as part of a lawsuit from Coinbase. In a partial win for the exchange, the court agreed there was a lack of clarity from the agency over regulation. But Gensler, once again, said the U.S. already has laws that cover crypto. Next, sticking with the SEC, Robinhood will pay $45 million to the regulator to settle administrative charges by the agency. The SEC says the firm violated more than 10 separate security law provisions related to their brokerage operation between May of 2019 and December of 2023. Those include failures to report suspicious trading in a timely manner, failure to implement adequate identity theft protections, and failure to address unauthorized access to Robinhood computer systems. In a statement, Robinhood said, quote, "We are pleased to resolve these matters. As the SEC's order acknowledges, most of these are historical matters that our broker-dealers have previously addressed." This settlement, however, is unrelated to the firm's crypto-focused investigation that was disclosed back in May. As of noon Eastern, its stock had jumped more than 7%. Last, Circle, the issuer of USDC, says circulation of the stablecoin grew 78% year over year. That's from the firm's 2025 State of the USDC Economy report issued today, which highlights some recent milestones for the stablecoin. Circle says its circulation growth outpaced other stablecoins this past year. The firm said this is due in part to its embrace of MiCA in 2024. It also says that U.S. stablecoin legislation may have an opportunity to pass under a Trump administration. This comes as stablecoin competition heats up in the U.S., with large players like Ripple and PayPal recently entering a space currently dominated by Tether, which yesterday announced plans to relocate to El Salvador. All right, for our main story, Bitwise out with a new report which found 56% of financial advisors surveyed said they were more likely to invest in crypto after the 2024 election. Allocations into crypto also doubled from 2023 as investors warm up to the asset class. Crypto World's Tanea McKeel spoke to Bitwise's Matt Hougan about the survey and what trends to expect from financial advisors in 2025.
The big number off the top of this report that we're talking about, 56% of financial advisors say they're more likely to invest in crypto this year, thanks to the election. So what is the calculus there?
Yeah, it's an absolute game changer. You know, we've been running the survey for 7 years, and for the past 6 years, we've asked advisors, what's preventing them from allocating to crypto? And you might think, it's how do I value this asset? Or it's too volatile for my portfolio, or I just don't understand it. But for 6 consistent years, the number one barrier they cited was regulatory risk and regulatory uncertainty. Well, the election tore down this wall. And I think as a result, we're going to see a flood of financial advisors, a flood of family offices, and eventually a flood of institutions moving into this space. It was a complete game changer for the industry, and I don't think we're going to go back.
Another big number here, 22% of advisors say they allocated to crypto in client accounts last year, and that's double 2023's 11%. So do you put that on ETFs, or are those based on directly holding crypto?
Yeah, it's mostly ETFs. ETFs are the easy button for financial advisors. It makes it extraordinarily fast, quick, and easy to add it to client accounts. And I think you saw in the flows of the ETFs last year that they were extremely well received by investors. And they helped this number go from 11% of advisors who allocated in 2023 to 22% in 2024. And I think that number is going to continue to grow into 2025. In a few years, I think we'll be at 50% or above. This is a train that is moving, and it's now accelerating.
I think one thing a lot of people are wondering about is when we're going to see Bitcoin ETFs added to model portfolios. Is that something you see happening this year? And, there's so much going on with the macro and with the regulatory environment. How big of an unlock would that be this year?
Yeah, it's a great question. I can sort of speak from the bleeding edge on that because Bitwise has been working with financial advisors for 7 years now, helping them allocate to crypto and client accounts. And I'll tell you, a few years ago, they were allocating for 1 or 2 clients. One thing that started to change after the ETF launched is we saw our clients who are at the forefront of this movement start to allocate across all their client accounts, start to add ETFs to the models they use as the baseline of how you allocate. I think that's going to double and triple and quadruple in 2025 as the big model providers get comfortable with this asset. We've already seen BlackRock say clients should have 1 to 2% allocations to crypto in client accounts. I think that's going to become the norm. We're going to get to the point where it's more common to have a crypto allocation than not. To get there, we need hundreds of billions and trillions of dollars of investment. But I do think that's what we're going to see over the next couple of years.
Looking into the second year of crypto ETFs, so, the launch of Bitcoin ETFs a year ago, historic, a huge success. And it kind of seems like this second year of crypto ETFs, which already includes 6 months of ETH ETFs, and as you well know, there have been applications filed by you and others on ETFs that would track other cryptocurrencies. And with the expected regulatory changes this year, it sounds like it could be a year of innovation for these types of products. But how do you think that demand will measure in Bitcoin ETFs actually in both Bitcoin ETFs and altcoin ETFs? How do you think demand will measure compared to that first year that we just saw?
Yeah, as I look back on 30 years of ETF history, what I see is that the first year of an ETF flow is very rarely the biggest year. Typically, the first year is just a down payment. The second year is bigger. The third year is bigger. The fourth year is bigger. And there's some fundamental reasons for that. If you look at the Bitcoin ETFs, they're not yet approved on Merrill Lynch or Wells Fargo or UBS. I believe that over half the market still can't access these ETFs. So I think the $35, $36 billion we saw in 2024 will be easily surpassed in 2025 when we'll see $50 billion plus come into these products. I also think you'll see people who invested in the Bitcoin ETFs start to look at the Ethereum ETFs, and people who have allocated to the Ethereum ETFs look at the kind of new products that you mentioned, Bitwise and others are working on that look at smaller cap assets. So a rising tide lifts all boats. That's at least the message from ETF history. And I don't see any real reason why this would be different. All of the patterns look like it will be the same, and 2025 will be a record year for the space.
I do want to end on prices. So, you and I have spoken fairly recently, and coming into 2025, there is always a little bit of macro risk when we talk about prices, but it seems like in the past week, that macro narrative has become much stronger than it was earlier in the month and at the end of last year. So where does your outlook on the Bitcoin price stand today? Looking at the rest of the month and the quarter, I hope you know me well enough to know I don't think that's any indication of where Bitcoin goes for the rest of the year. But sources I talk to are expecting a little more choppiness in January and through Q1. Do you expect a similar thing?
I think the fundamentals behind Bitcoin, the crypto specific fundamentals, are just too strong to be held back by the macro headwinds we're facing. It is a headwind, to be clear. Higher rate expectations are worse for risk assets, including Bitcoin. But the fundamentals of rising institutional adoption, of the changing attitudes of Washington, of the potential for a Bitcoin strategic reserve, I just think it's too strong to be overcome by these macro headwinds. So I don't know where we'll go in the next week or two, but I think we'll end Q1 higher than we are today. And as you know, I think we'll end 2025 north of $200,000. I still feel consistent about that. These crypto specific tailwinds are just too strong to deny from my perspective for long.
Okay, that's all for Crypto World today. We're back again tomorrow. We'll see you then.